Hi, ladies. Welcome back to Sisterland Investors, the podcast where bold women build wealth, one mindset shift and land deal at a time. I'm your host, Elizabeth. And today we're going to be discussing how to raise money for your land business legally and ethically. We want to do this one legally and ethically. And this entire podcast is dedicated just for that. We're tracking a topic that so many of you have asked about, and I decided to make just one podcast for this. It's crucial, it's important. When we first started, my sister and I, we used our own money. We used our own 401k. We pulled money from other assets that we had. And I'm going to tell you, ladies, the best thing you can do is start partnering up with other women in our community, other investors that have done it. And a lot of them are happy to give you the entire amount, 100%, or a percentage. However, try to start partnering up from the get-go. How to raise money for your land deals the right way. We're talking legally, ethically, and with confidence. Okay, ladies, are you ready? We're super excited. Whether you're flipping your first parcel or scaling up to a 7-figure land business, you'll need funding. We all need funding. And the way to raise it can either protect or jeopardize your future. So it's very important that we dedicate an entire podcast just for this, okay? Why raising money? Well, let's be real, ladies. Cash is queen, and land investing speed matters. So we need the cash, we need funds available because you get great deals sometimes. And if you don't have that cash ready, these guys will go with some other investor. Sometimes the deal is good, but the funds aren't ready. So we want to make sure the funds are ready. This is why you want to access other people's money. Real estate investing communities called OPM, other people's money, because it allows you to move faster, do more deals, get more creative. It's a win-win for you and the investor that wants to just do it passively. So this is huge for everyone. So that's why raising money is important. The legal basics of raising private money. Here we go. We're not attorneys. I have to set that out really quick here for all of you ladies. We're not attorneys, but here's what we can share to help you stay safe, okay? Write it down, get your pens out. You cannot publicly solicit investments unless you're registered like a BIA registered D exemption. So that is number one. Okay. Number two, start with people you know, mom, dad, sister, uncle, cousins. You want to start with friends and family, coworkers. That's how we started. A warm network that you could they know what you're doing. They've seen you probably do it a couple of times and you reach out to them. We've had people even reach out to us. Like we've done it so many times now. We have people calling us and saying, when is your next land deal? Where is it? What are you trying to do? And we'll tell them. Number three, always discuss the risks. There's always risk. One, that it doesn't sell. So what's going to happen if it doesn't sell at all? They get to keep the property. What happens? Like you have to have those conversations, get them in writing, maybe have an attorney draft everything out. Don't promise guarantees or returns. We never make a promise. We do say there's risk because there is risk and everything there's risk. Nothing's 100%. So you make it very clear. Protect your lender and protect yourself. Get agreements in writing and write everything down. Like if everything goes south and nothing happens to this, what happens? How do you get your money? You write it all out, get an attorney, so you both sign, you both agree. Again, there's no guarantees, so make sure you get those agreements in place. Ethical fundraising. Raising money should come from a place of alignment. Ask yourself, is this deal good enough for me to lend on it? Whenever you ladies, you in our community or other ladies out there come to us and say, there's this piece of property, what do you think? Because I get that a lot. I review it, I see it, and is this something I would do? I'm very honest with you. I'll tell you, yes, I would do it, or no, I wouldn't do it. And I tell you why. So you always ask yourself, would I do it or wouldn't I? And if I wouldn't, why not? Say it. Say the why and why you should and why you shouldn't. Am I being 100% honest about the timeline? Risk, and returns. Again, honesty is crucial. You have to be completely honest because we want them to come back and lend, or we want them to come back to give us more land deals. So you have to be very honest. If you're the lender, you say, okay, I don't need this money for another 3 years. Here's my 100K. Do as you please. I won't need it in case of an emergency. I have other funds. You have to be very clear. And you, as a borrower, have to be clear too. I'm going to use this money. It's going to be tied up with this property. You have a lien against this property. If for whatever reason it doesn't sell, these are the other properties I have available that you could dip into to get your money back. 3 years, 4 years, whatever you think it'll take. I always give more. So if I think it's going to take 6 months, I always say a year. If I think it's going to take 2 years, I say 3 to 4 years. So always give yourself more time so you don't be last minute trying to figure out what to do. Tell them the risk and the returns. Again, that depends on the land, the deal, how it is, how it's structured. An investor can get anywhere from 8% up to 15 or 20% returns. Again, that's something you discuss with them. Both of you agree, but be very, very honest. Also, you're building a sisterhood of trust. So that's where you want to be honest. You have to, in this business, you have to. There's no other way around it. You're building off of trust. One bad experience ruins a relationship and reputation forever. That's all it takes, just one. One sour deal could go sour and that's it. One great experience turns into one-time lender into a lifelong friendship. And that is so true. We've made great friends. We partnered up with great people that they come back and say, when can we lend again? We're excited to help. Here's my money, lend. But yes, honesty is always key. And what we like to do is we may use different lenders for different projects that we're doing. We try not to go with the same one because we want to make sure we build that repertoire. Again, this is up to you. If you want to go with the same lender or you want to try different ones, that is all up to you, how you feel comfortable. The next thing is how to approach potential lenders. A lot of you ladies in our community here are like, how do I ask for the money? Who do I go to? Where do I go to? So this is another way you could do it. Create an investor packet. In the packet, it's very important for you to have these things. Are you ready? Your background, why land, examples of the deals you've done in the past, the length of time that they were on the market, the returns that you got. All that is very important. Have a spreadsheet. They like to look at the numbers. Your exit strategy. Again, before you even purchase, you need to think of the exit strategy. Always start with the end, the timeline, the legal structures, and how they are protected. These are very important. Again, there's a checklist. Make sure you write it down. Make sure you get all these checked off so you can approach them and they could be ready with all those. Maybe they haven't even thought of that question and you just give it to them. Use simple phrases like, would you like to partner with me on a land deal? That's how we started. That's how I started. Would you like to partner with me on a land deal? And then I would go off on what it was. These are simple phrases that you could use with them. I help investors earn 8 to 15% returns on land deals. Would you like to see how or learn more about it? And they're going to be curious. They're like 8 to 15%? Yes, tell me more. Examples of deal structures. Here we go, ladies. 3 quick examples of ethical deal structures. Very quick, and you're going to love them. We've done them. Promissory note secured by land. That's one. Number 2, joint venture. You make a joint venture agreement, you split the profits, you decide the percentage, you decide. It's up to you. Short-term lending with a lump sum interest at resale. That's another way. So make sure you or they decide on the structure and both agree on the trade-offs. Discuss what's best for your lender's goals and risk tolerance. This is a huge one. You have to know what their terms are, what their risk tolerance is, and then just structure it around that. Go to a different lender. But it's very important for you to set all that on the table. Be very crystal clear. So let's wrap up the takeaways on this. Sisters, raising money isn't about selling, it's about solving. You're offering a powerful opportunity to help someone grow their money while you grow your own business. This is huge. Here are the next steps, ladies, that you can take. Our private lender toolkit, we have it for our community members. Make a list of the 5 people you know right now in your trusted circle that you can trust to go up and ask them if they want to partner up with you. This is huge. Craft your money raising message. Sit down, write it down, practice it, practice with your husband, practice with your siblings, and make sure you start spreading it out there to your friends, your uncles, your cousins. Because the truth is, women are powerful with money. And when we raise it with wisdom and love, we raise everyone around us. You've got this. Now go attract capital, ladies. I love you, and I'll see you in the next episode. Ladies, take care. Thank you for joining us, and we'll see you on the next podcast.